Let's talk more about the Iran situation and that Phase 1 trade deal with Professor Anil Gupta of the University of Maryland's Smith School of Business. Professor, thanks so much for being with us this morning. Before we get to China, I'd like to talk quickly about Iran. How could this situation possibly impact world markets, do you think?
I think the impact on the world markets, unless, there is a war between U.S. and Iran, which is highly unlikely because both sides have signaled de-escalation. So short of a war, I don't think what's happening in Iran would have much impact on the world markets, as we have already seen, because, ultimately, right now we have a glut in oil. So therefore, any actions within Iran, et cetera, is not likely to have much of an impact. And it's unlikely that Iran would risk disrupting supplies in Saudi Arabia or elsewhere at this moment.
All right, I want to turn to the China trade deal now, because Vice Premier Liu He is reportedly on his way to the U.S. today, a couple days before he and President Trump are scheduled to sign that much talked about Phase 1 trade deal. Just what's in that deal, of course, still up in the air as the Chinese work to translate that document. So do you think that this is actually a done deal, or there's going to be more back and forth when the two get together?
I think, Phase 1 is a done deal, but of course, we don't know what is in the deal. But, the way I look at it is that substantively, not a whole lot here. And the reason, so it's more calling a truce. It removes some of the uncertainty, at least for the rest of this year until after the elections. Because, if you look at until September 2019, U.S. had imposed 25% tariffs on $250 billion worth of imports from China. Those remain in place. So what happens is that in September last year, there were additional tariffs announced. So on 120 billion, 15% goes down to 7.5, and no additional tariffs on another 160 billion. So in some sense, it's sort of going back to where things were in September. Agriculture exports is the big deal expectation, as Mr. Mnuchin said. But, he said China will import $40 billion worth of agricultural goods. That is unlikely. And the reason I say it's unlikely, because at the peak back in 2015, 2016, China imported about 20 to 25 billion worth of agricultural goods from the U.S. So therefore, taking it up to 40 is a much bigger increase. And what that means is a hit to imports from Brazil and Argentina. And there is no indication that China has signaled to Brazil and Argentina that imports from them will go down.
Do you think that the Phase 1 trade deal paves the road for a Phase 2, whatever that might look like? Because remember back to 2017 when this all first started, President Trump was talking about intellectual property being an issue, the markets in China not being open to us here. It doesn't appear as though the Phase 1 trade deal deals with any of those issues. Do you think we might get that further down the pike in a Phase 2?
We might, of course, just arithmetically, two can't happen before one. So that is true. But I think, it's impossible for anything on Phase 2 to happen this year in 2020, because even Phase 1, for example, there are enforcement questions about the increase by China of $200 billion of imports from the U.S., agriculture, $40 billion from the U.S., and if those things don't happen, I see no chance of a Phase 2. So I think there are uncertainties about enforcement of Phase 1 itself. Hopefully that happens, but big uncertainties.
All right, we'll be watching. It's supposed to happen on Wednesday. Professor Anil Gupta, thanks so much.
Hey, investors. Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.